Okay, imagine this. You're looking at the currency markets, and it just seems like everyone else has some kind of insider info except for you.
Yeah, a lot of people feel that way, I think. Especially with Forex. It's really easy to get lost in all those charts and numbers.
For sure. And I've been trying to wrap my head around this introduction to fundamental document. It's really interesting, but there's a lot to take in.
And that's exactly why we're here. We're going to break down some of those complex ideas. We can start with the three main ways to analyze Forex: technical, fundamental, and sentiment.
Okay, so it's like we're looking at the market through different lenses. Each one gives you a new perspective.
You got it. So, technical analysis, that's all about charts and patterns, looking for clues in how the market has moved in the past to get an idea of where it might go next.
So I'm trying to read a chart. What kind of patterns should I be looking out for?
Well, a classic one is called the head and shoulders pattern. You have a peak, that's the head, and then on either side you have two lower peaks. Those are the shoulders. Traders often see this pattern as a sign that the price might be about to reverse and go down.
Interesting. But I'm guessing that no pattern is a sure thing, right?
You're absolutely right. And that's a great point for a pro tip.
Hmm.
Don't ever rely on just one pattern. Always double check with other indicators, like how much trading volume there is. This helps you avoid getting tripped by false signals.
So it's more like piecing together a puzzle than looking for that one magic clue.
Exactly. Now, technical analysis focuses on those chart patterns, but fundamental analysis digs into the real-world stuff that moves currency values, like what's going on in the economy, central bank decisions, even political events.
So less about the charts and more about what's happening in the wider world.
Exactly. For example, you'd want to keep a close eye on a country's GDP growth, their inflation rates, how many people are employed. All of those are key indicators of how healthy their economy is.
That makes sense. I mean,
Right.
those factors would have a big impact on how much demand there is for a currency.
Absolutely. And here's a good example of how interconnected things are. Imagine a huge hurricane hits an important oil-producing region.
Oh, wow. Yeah, that would definitely shake things up.
For sure. You'd probably see oil prices jump up because of the disruption to supply. And that would end up affecting the currencies of countries that produce oil and countries that rely on buying it. A domino effect.
That really shows how something that seems totally unrelated can have a ripple effect across the whole Forex market. But I'm guessing that even when you really dig deep into these fundamentals, there are still some limitations, right?
You're right, there are. And it's important to be aware of them. While fundamental analysis can give you a good overall picture of the economy, it's not going to tell you the exact best time to buy or sell. It explains the reasons why prices might move, but not necessarily exactly when they'll move.
So you need to have other tools ready to use.
You got it. And that leads us to sentiment analysis, which is all about trying to figure out the collective psychology of the market.
Okay, this is where it gets really interesting. So we're talking about tapping into the minds of the traders.
In a way, yes. You see, even with all the fancy analysis tools out there, the Forex market is ultimately driven by people making decisions. And those decisions are often influenced by emotions, like fear and greed.
So sentiment analysis is kind of like reading the emotional temperature of the market.
Exactly. It's about understanding the general mood of the market and using that to anticipate big price swings.
That is fascinating. So if we say that technical analysis is like our compass and fundamental analysis is the map, does that make sentiment analysis like checking the weather forecast before you set sail?
Love that analogy. Just like you wouldn't want to get caught in a storm, you don't want to make a trade that goes against the general feeling of the market.
This is all making a lot more sense now.
Mm-hmm.
But how do you actually measure something as intangible as sentiment? Is this like reading tea leaves or something?
Oh, no. We're not talking about anything mystical like tea leaves. There are actually some pretty cool tools and measurements we can use. For example, there's something called the Commitment of Traders Report. It's also known as the COT report. And basically, it shows us the positions of different types of traders. So we can get a glimpse into whether the smart money is feeling bullish or bearish.
So you're kind of peeking behind the scenes to see which way the big players are leaning.
Exactly. And then on top of that, you've got social media sentiment analysis. Believe it or not, platforms like Twitter and Reddit can actually be gold mines of information.
Wait, are you serious? You're telling me that a bunch of tweets can actually move the markets?
You'd be surprised. It's all about getting a feel for the overall mood. If suddenly everyone on Twitter is super negative about the euro, that can actually create a ripple effect, especially in the short term.
Wow, that is both fascinating and a little bit scary. So it's like sentiment analysis is a mix of psychology, data science, and even a bit of good old-fashioned market intuition.
You hit the nail on the head. It's a really powerful tool when you use it together with the other two pillars we talked about. Let's say you're thinking about making a trade on the EUR/USD pair. You've looked at the charts, that's your technical analysis. You've dug into the economic reports, that's the fundamental analysis. And now you're also getting the sense that the market sentiment is shifting towards being bullish on the euro. That's a pretty good indicator that things might be lining up in your favor.
So it's like getting 3 green lights before you place your bet.
Exactly. Each pillar gives you another piece of the puzzle. They all help you make a more informed decision. Think of it this way. Technical analysis tells you what the market is doing. Fundamental analysis tells you why it's doing it. And sentiment analysis tells you how the market feels about it.
Okay, that is a great way to sum it all up. But even with all these tools, it sounds like Forex trading takes a lot of constant watching and analyzing. Is it ever okay to just step away from the charts for a bit?
That's such an important question. And it brings us to a really crucial part of Forex trading that often gets overlooked. Risk management.
Risk management.
Yeah.
So we're talking about how to protect yourself when the market inevitably takes a swing in the wrong direction.
Precisely. Listen, even the most experienced traders in the world, they have losing trades. It's just part of the game. Risk management is all about making sure those losses don't wipe you out completely. It's about controlling them.
So it's like wearing a helmet when you're riding a motorcycle.
Yeah.
You obviously hope you never need it, but it's crucial to have that protection just in case.
I love that analogy. It's about knowing your limits, setting those boundaries, and having a game plan for when the market gets rough.
That makes a lot of sense.
Yeah.
So what are some practical steps that traders can take to manage their risk effectively?
One of the most important tools you have is something called a stop-loss order. It basically automatically closes out your trade if the price starts moving against you past a certain point. That way, you're limiting how much you can lose.
So it's like an emergency brake for your investments.
Exactly. It helps you take the emotion out of trading, which, believe me, can be your worst enemy, especially when things get intense.
I can definitely see how valuable that would be. What other risk management strategies should traders keep in mind?
Diversification is huge. It's like that old saying, don't put all your eggs in one basket. You don't want to put all your trading capital into just one currency pair.
Right, spread the risk. Don't pin all your hopes on one single outcome. It's good advice for life in general, not just trading.
Absolutely. And maybe the most fundamental rule of risk management is this. Never, ever trade with money that you can't afford to lose. Forex trading always comes with risks. That's just the nature of the game. So it's crucial to approach it with a clear head and a long-term perspective.
Words to live by. Don't bet the farm on a single trade. So we've spent some time exploring these 3 pillars of Forex analysis: technical, fundamental, and sentiment. And we've talked about how important risk management is.
Yeah.
It seems like mastering Forex is more about the journey than reaching some kind of final destination, wouldn't you say? So we've spent some time exploring these 3 pillars of Forex analysis: technical, fundamental, and sentiment. And we've talked about how important risk management is. It seems like mastering Forex is more about the journey than reaching some kind of final destination, wouldn't you say?
100%. It's more like you're learning how to navigate by the stars. You're always going to be refining your skills, adapting to new information, and adjusting your course as you go.
And I imagine that can feel really overwhelming for someone who's just starting out. What advice would you give to those traders who are just kind of dipping their toes into the world of Forex?
I'd say the most important thing is to embrace the learning process. There are so many resources out there these days, online courses, demo trading accounts, things like that. They let you practice your strategies and build up your confidence before you actually risk any real money.
So it's kind of like practicing on a calm lake before you head out into the open ocean.
Exactly. And don't underestimate the power of community either. Connecting with other traders, online forums, trading groups, mentorship programs, you name it. It can give you some really valuable insights, support, and even just a sense of camaraderie along the way.
Because even those seasoned Forex traders, they rely on their network and they never stop learning.
Right. Absolutely. The thing about the Forex market is that it's always changing. New challenges pop up, new opportunities emerge. What works today might not work tomorrow. So you have to stay curious, stay adaptable, and stay plugged into what's happening in the market.
So if we had to distill everything we've talked about into one key takeaway for our listeners, what would it be?
That's easy Forex trading. It's a multifaceted skill. It's not just one thing. You need a balanced approach. You need to master those 3 pillars of analysis: technical, fundamental, and sentiment. And you absolutely need a solid risk management strategy. And finally, never stop learning, never stop refining your approach. It's a journey, but the potential rewards are huge.
Well said. It's like we've given our listeners a treasure map, but it's up to them to set sail, navigate those choppy waters, and ultimately claim the prize for themselves.
And who knows? With the right attitude and that thirst for knowledge, they might just find themselves on the path to financial success in the exciting world of Forex.
I think that's a perfect note to end on. Thank you so much for joining us on this deep dive into Forex.
It was my pleasure. I'm always happy to geek out about the markets with you.
And to all our listeners out there, we hope you found this deep dive insightful and empowering. Remember, Forex might seem complicated, but with the right knowledge and a strategic approach, you can totally unlock your own currency confidence. So until next time, happy trading, everyone.